Hello everyone, thanks for joining us today and welcome to this educational presentation of the secret ingredient to trading engulfing patterns. Now, engulfing patterns are a very common as well as popular way in which to trade. I think the reason being is that you can transfer them onto virtually any market, any time frame. A lot of people like to use them with stocks, currency pairs, and even with futures trading. It's been my opinion in the last 4 decades, though, that most people are missing a secret ingredient to being able to trade them successfully or consistently. For example, I'd like you to take a look at this particular chart pattern right here. This is the standard definition of what we're looking for in an engulfing pattern. Okay, this is just your generic chart. An engulfing pattern is a 2-bar pattern. Now, bar number 1 in a bullish engulfing pattern usually opens and closes lower. Bar number 2 opens and closes higher. So what bar number 2 does is its open to close range engulfs the open to close range of bar number 1. All right, and that's all we're looking for. We don't need to engulf the entire bar. All we need to do is engulf the open to close downward range. This usually leads to a higher trading market, that's what traditional wisdom would tell us. And now a bearish engulfing pattern is just the opposite side of the coin. It's a 2-bar pattern. Bar number 1 opens and closes higher. Bar number 2 opens and closes lower. And what we're looking for is the open to close range of the downward bar number 2 to totally engulf the open to close range of the downward, or I should say upward, bar number 1. Remember, we're only looking to engulf the open to close range. This is the standard traditional way. When you see this 2-bar pattern, traditional wisdom tells us that we will have a downward bias. Okay, so here is the standard definition. The engulfing candlestick pattern is a reversal pattern, extremely important. It usually occurs at either the top or the bottom of a trend. Now, this is the way we're all taught. This is the way I was taught some 4 decades ago to trade engulfing patterns. And this is the way they are, universally applied in trading any market in any time frame. Here's the only problem. We'll see something as far as this example in SCG. We're going lower. As you can see, the trend is obviously down. So we're looking for a reversal in that trend. And what do we have here? Well, we have 2 bullish engulfing patterns. All right, and that coincides with some type of double bottom. Maybe you're looking at support and resistance. Maybe you're looking at volume. Maybe you go to a guru that teaches you how to trade in some type of chat room or trading room every day, and this says that this is a really good buy sign. You've got to buy this. So you jump in based on the bullish engulfing patterns and any other things that are substantiating your buy, and look what happens. Okay, does it look familiar to anybody? All right. Or you can see something like this. You have kind of a sideways to upward action, and then you have a nice run, and then you're met with a bearish engulfing pattern. Once again, traditional wisdom tells us that this is a sell sign. We've hit some type of a top here. We're probably going to come down, fill this gap before we go higher. So you decide to sell, and look what happens. And you thought, well, maybe you got in a little bit too early. Okay, so you lost a lot of money, but you're going to make it all back because this was the real bearish engulfing pattern. So you decide to short that, and it goes even higher. All right, so there is an ingredient that's missing to trading engulfing patterns. I know because I first started out trading this way some 4 decades ago. But I've learned it in my experience with trading that once you apply this secret ingredient, you'll be able to add your odds for consistency tremendously with engulfing patterns and with candlestick trading as well. So welcome to this educational presentation. My name is Steven Primo, president and founder of Specialist Trading. And if you're new to my presentations on a weekly basis, as you've just seen in the opening statements, we're all about educating you. It's not our purpose or goal to sell you or force feed you signals or tell you what the perfect market is or to tell you what the perfect time frame is. That's for you to decide. Our goal and our mission is simply to provide you with information, with sound fundamental education that has stood the test of time. Now, the reason I know this is because I've been trading for 40 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years, I was a specialist. That means I made markets in roughly about 50 stocks. So I made markets during the crash of 1987. It happened about 30 years ago. I also traded through the bull market that followed. So I've traded in just about every market environment imaginable. Any system or any technique or any method you can think of, I've traded. So I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. I teamed up with Pro Trader Strategies about 8 years ago, and all we do is educate our members around the world in virtually over 110 countries and in every state in the United States the things that have shown to work in terms of consistency. Because in the end, it's not some fly-by-night system that promises the world that goes back and back tests, 10, 20 years and shows phenomenal results. That's not what's going to make you a successful trader. What will make you a successful trader is by you making your own decisions based off of sound fundamental techniques and methods, and that are consistent. In other words, that have a two-step forward, one-step back approach. It's all about longevity, not about having a tremendous year and then giving it all back the next year, okay? So this is what we do at Specialist Trading. Now I'm going to share with you the secret ingredient that really has helped my candlestick trading, especially engulfing patterns. But as always, we are first required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results. I'm going to show you a ton of slides today using this secret ingredient, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a brief moment to view our required disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post new information, either just little bits of wisdom along the way to things that our strategies have generated. So lots of great free information to follow us on Twitter. Okay, so as I stated, we are not like all the other webinars you may have attended in the past, whereas we're trying to sell you the perfect system or a perfect market to trade or perfect indicator. We don't believe in that. What we try to do is just market and promote strategies and courses and methods that have shown to have high levels of consistency. But then we mentor you along the way because we just basically give you a standard format, but then we work outwards from there. We try to teach you how to trade it. If you want to be an aggressive trader, we teach you and show you ways to trade it aggressively. If you want to be more of a conservative trader, we show you ways in which to trade conservatively. We give you different options for entries, different options for exits, different options for stop placement, because ultimately you've got to decide how to trade it. That's the only way in my 40 years of trading that I've found how traders become consistent. Not by going to a chat room and seeing what everyone else is doing, or by going to a signal service and simply copying what everyone else does. But you have to be in charge of your own trading. So as you can see here, my goal is not to force feed you signals. My goal is to teach you how to trade with a specialist edge. This is the same edge that turned my trading around when I was struggling tremendously some 40 years ago. And it's been what I believe the cornerstone to allow me to trade for 4 decades now. This is what we try to do with all our members. Now, since this is an educational presentation, I do love to take your questions as always, but please remember that we have a lot of slides today. So if we stop for every slide, we're going to be here 3 or 4 hours. So please keep your questions till the very end. I know a lot of you like to ask a question every time you see something pop up that doesn't make sense, you don't fully understand it. I promise I'll get to each and every one of them. The only question I will answer is this being recorded? Yes, it is. So if you happen to come in a little late, or if you didn't hear this, don't worry. We will record everything. We'll provide you with a link to this recording. And if you have to leave early, or if you're having technical difficulties, I see some people have difficulties with sound sometimes, or seeing the screen. Oftentimes, if you log off and then log back on, everything will be corrected. But if you're having technical difficulties, many times it's your internet connection, and we'll send you a link so that you can see this presentation in its entirety. Okay, so once again, if you happen to join us, we have a good crowd here today. If you happen to come in a little bit later, please wait till the end to ask any questions. All right, so let's begin. Now, what is the secret ingredient that is missing from candlestick trading? I know you all want to see this and hear this. Well, it flies in the face of traditional wisdom, because candlestick patterns, and most especially engulfing patterns, will have a higher level of consistency if you trade them in sync with the trend. Now, this goes against everything we've ever been taught. Remember, I showed you that standard definition where that candlestick patterns, and in most especially engulfing patterns, are to be applied as reversal patterns, meaning that you wait for a trend and you look for these things to signal a reversal of that trend. Well, this couldn't be any further from the truth. I have shown, and I have seen, I should say, and I will show you that you have a higher level of consistency if you trade them in sync as opposed to against the trend, as opposed to trying to pick a top or a bottom. Okay? So people say, well, what should I use for a trending tool? Well, right now you have at your access of a lot of different ways in which to find out what the trend is. Here are some of the most basic ones. In fact, we incorporate some of these in our strategies and methods. You can use an indicator. Sometimes when an indicator such as a moving average, or as some type of oscillator is telling you that the market is going up or down, that can be your definition of what the trend is. a lot of traders like to look at patterns. Okay, they'll see that higher highs and higher lows indicate an uptrend, or lower lows and lower highs indicate a downtrend. You can use those. Still, other members like to say, well, Steve, I've always been taught to apply different time frames. So if I'm trading an hourly chart and it's going, and I'm looking and seeing a sell signal, well, the daily chart has to also be in a downtrend as well. So they like to make sure that the higher and the lower time frames are in sync to find out what the real trend is. Now, these are all okay, and they're all generic ways of finding what the trend is. And they have a certain level of consistency, but we don't rely on them too much because, as I stated, they only have a certain level of consistency. They're very generic and they're okay, but as your mentor, as someone who's trying to teach you ways in which to trade, I want to give you the best of the best. So here's what I feel is the secret ingredient. This is what I was taught some 4 decades ago, and this is what has dramatically changed my trading in terms of finding the short-term trend. That's the PET D, okay? You've heard me speak about it before. I learned this some 38, 40 years ago on the trading floor, and it was originally taught to me as a formula that you had to calculate by hand. But guess what? We've taken the work out of it for you because we've turned it into a proprietary color bar algorithm. For example, if you look at this chart and add it right here, we see that, well, yeah, obviously in hindsight, we're in an uptrend. The only trouble is most people using their technique don't find out that you're in an uptrend until somewhere around this point right here, until you've got confirmation. And then at that point, that's when you step in to buy, or maybe your strategy generates a signal, and then look what happens, okay? What if we could have found out back here that we were in an uptrend, and not at the top, but at least found out before the bottom fell out that we were going to be in a downtrend? Well, all you have to do is apply the PET D, our color bar algorithm, and we knew well in advance when we had a series of green bars that we were going higher, and we knew well in advance before we fell out of bed that we were going lower with a series of red bars. That's how simple it is. It's a proprietary algorithm that we're keeping in-house, but all you have to do is simply look at the color of the bars. That's the beauty of it. We've taken the hard work out of it for you so that you don't have to calculate this. We know we have some people that trade daily and weekly bars where it would be simple to calculate, but what if you like to trade tick charts? What if you like to trade currency pairs on a 5-minute time frame, or futures or intraday stocks on a 10-minute time frame? You'd be spinning your wheels because you'd be calculating this every bar, and it would be too difficult. So now we've just simply colored the bars so you absolutely know if you're in an uptrend with a series of green bars or in a short-term downtrend with a series of red bars. So we're talking about candlesticks now. What is the correct way to trade engulfing patterns? How are we going to apply this with our engulfing patterns? Well, it's extremely simple. Here are the rules to applying this to bullish engulfing patterns. You're only going to take a bullish engulfing bar signal. In other words, you're only going to buy if bar number 2, remember it's a 2-bar pattern, if bar number 2 is colored green. That's it. We don't care what the bar's colors were before that. We don't care if bar number 1 is red or green. It makes no difference. All we want to see is that bar number 2 is green. That's how simple trading can be once you apply this secret ingredient. All right, so what we're looking for is, once again, this 2-bar pattern. And all we need to see is, once we apply the PET D, is that bar number 2 is green, as you can see here. Now, it's an up day, so the outline will be colored green. Now, in this scenario, bar number 1 is down, but as you can see, the bar is a dark colored green. So that's okay. That still means that they're both in a short-term uptrend, but we're not concerned with what the color of bar number 1 is. We're only concerned that bar number 2 is colored green in a bullish engulfing pattern. All right, so let's look at this example here and win. Someone looking at this would say, well, Steve, I've always been taught that engulfing patterns are used as a reversal pattern in a trend. Well, there's obviously no trend here. I mean, we're just going sideways. But what do we have here? We have a bullish engulfing pattern. So traditional wisdom would tell us not to trade this because there's no current trend at all. But we don't listen to conventional wisdom and traditional wisdom because we know there's no consistency in that. Trust me, take it from someone who tried using that technique 40 years ago. I couldn't get consistent results. It wasn't until I applied the PET D and I see that there's no trend or range in the market, but if I apply the PET D, all I'm concerned about is the color of bar number 2. And bar number 2 is colored green. In fact, the whole time we were going sideways, the PET D was coloring the market green. But bar number 1 was red, but bar number 2 is green. So in this engulfing pattern, that's all that matters. And 12 points in 1 week, okay? You You see, that's how simple it is when you don't listen to traditional ways of doing things, because there's no consistency in them. I remember my mentors taught me this, said, Steve, it's amazing how many things there are in the market that aren't. Meaning that we follow so much of this conventional wisdom, but there's no consistency in it. You have to follow the things that have stood the test of time. All right, now what if you get a bearish engulfing pattern? Well, traditional wisdom tells us, well, a bearish engulfing pattern has to be at the top of a real nice strong uptrend, right? No, we don't care if it's going up or down. All we care is that bar number 2 is going to be colored red. That's it. That's the only thing we look for. So if you find a bearish engulfing pattern, bar number 2 should be colored red. So if we look at this scenario right here, here's your standard bearish engulfing pattern. Once we apply the PET D, we see that bar number 2 is red. Now, in this scenario, bar number 1 is green, but it makes no difference. It wouldn't matter if this were red as well. All that matters is that bar number 2 is red, meaning the short-term downtrend is in place, and you'll have a nice sell signal with consistency, hopefully going in your direction. All right, so let's look at this chart here in Fossil, FOSL. Now, obviously, the trend is down. All right, we don't need a convoluted indicator to tell us that. We know we're going lower. Traditional wisdom would tell you that you're looking for a reversal pattern. It would tell you to look for some type of bullish engulfing pattern. All right, so this is where you'd want to buy, right? But remember, there's no consistency in this type of trading. All right. Now we have a bullish engulfing pattern. What color is the bar? It's red. So we're not going to take this trade. We don't care what the trend is. We don't care what direction. We don't care what conventional wisdom tells us. If bar number 2 is red, we're not taking the trade. And look what happened. Okay. Now, you would have had a higher level of consistency if you looked for things in sync with the trend. Remember, that's the secret ingredient, trading engulfing patterns in sync with the trend. And as you can see here, what did we have up at the very top here? We had a bearish engulfing pattern, and bar number 2 was colored red. You think that would have worked out well for you? And if you missed that, well, guess what? Here's another bearish engulfing pattern that you could have taken advantage of. So do you see, these patterns work much better if you are in sync with the trend. And the best tool I know for finding the short-term trend is the PET D, because there's basically nothing you have to do. All you have to do is look for the colors. All right, so now that we know the idea or the concept of what we're looking for, let's look at a bunch of examples. And remember, if you happen to join us late, we have a really good crowd here today. Please wait till the very end to ask any questions. I promise I'll get to all your questions at the very end, okay? All right, so let's look at some more examples, and let's start out with stock buy signals. All right, we'll start off with buy signals only. All right, as we see here, we have Urban URBN, and we were going lower, and as we have a nice jump up, there is the change in color with the PET D. Now we have a bullish engulfing pattern. We don't care what the trend is. We don't care what conventional wisdom tells us. All we care is that bar number 2 is colored green. And if you can see here, the outline of bar number 2 is green because we have an open body here. It's upward day, and bar number 1 was a downward day. So that's telling you it's okay to take, and look what happened to the stock, okay? And if you missed that, well, here's another example in WIN. As we saw earlier, we have an up day here, and the trend has now changed, even though we're going sideways. And so we have a bullish engulfing pattern. The outline is colored green, 12 points. It's that simple. See, you don't have to look at reversal pattern. You don't have to look at news. You don't have to pay for this subscription service for signals. It's just this easy. You're in charge of your trading, and you can decide if you want to take these signals or not. What about letter R? Okay, well, we're going kind of sideways here. All right, we're going up and then lower and up, but we have a bullish engulfing pattern. All right, so all we have to do is simply see what color bar number 2 is. It's colored green, 13 points to the upside. All right, even though we were going sideways and there was no real direction, we have a really nice upward move. Here's another example, RTN. Now, this goes entirely against what we've always been taught. Obviously, we've been going higher. So conventional wisdom tells us to look for a reversal pattern. We don't care about reversal patterns. There's no consistency in that. We just want to go in sync with the trend. So at the very top of this nice up run, we have a nice bullish engulfing pattern. So rather than look to see that we're going to reverse the pattern, let's just go with the trend. 17 points to the upside. Now here's another signal to go long if you missed that first one. And let's look at KLAC. Once again, all the bars are green, but all we care about is bar number 2 in the pattern. 11 points to the upside, okay? And as we're going up, even when we had this kind of sideways and downward consolidation, the PET D is still coloring the bars green, even the down days. Now, if you missed that, there's another setup right here. And if you missed that one, there's another one right here. That's the beauty of this. When you're trading in sync with the trend, as you continue to go higher and higher or lower and lower, if bullish and bearish engulfing patterns are generated, all you have to do is just see if they're in sync with the PET D and then just take them. You don't have to say, well, you know, I'm only supposed to take bearish engulfing patterns. Well, here's a bearish engulfing pattern right here. This is the way most people would trade. All right, we say, well, we've had a really nice run up here. Bar number 2's range totally engulfs bar number 1's range, so I should go short this, right? Well, had you shorted that, you would have lost money. What color was bar number 2? Bar number 2 is green. We should only go short if bar number 2 is red. This is how simple this tool is. You would have lost a lot of money using the traditional way in which to trade engulfing patterns. All right, this is the secret ingredient by applying the PET D. Let's look at eBay here. Now, when we say methods are consistent, we mean that it's a two-step forward, one-step back process. That one step back means that you will have a loss from time to time. That's perfectly okay, but a consistent method means that many times you're able to recoup that loss very quickly. Let me show you what I mean here in eBay. Now, we had a sell signal that was generated, a bearish engulfing pattern. It's validated with the PET D, it's colored red. And it goes down a little bit, but not really enough to make any money. And then it starts to firm up again, all right? So you're not really doing it. If you're still in this trade, you're not really making any money. And then what happens here? We have a bullish engulfing pattern that is colored green. So if you wanted to stop and reverse, you would take the half-point loss. Let's say you took a full point loss, okay? But if you got back in to trade, you just switched with what the market wanted to do, well, you made 3.5 points to the upside. So maybe you lost half point, a point, to make 3.5 points. That's what consistency means. All right? It's perfectly okay to have a losing trade every once in a while. I have losses all the time, but I have the faith in knowing that my methods are so consistent that I'm able to make them back sometimes rather quickly. There's nothing to worry about when you have a small loss. Now, here's an example in GPC. Someone saying, looking at this chart would say, well, Steve, we're just going sideways. There's absolutely no setup at all. There's no signal at all of what the trend is going to be. Well, yes, there is. We have a bullish engulfing pattern, which has a high level of consistency if it's in sync with the PET D. And yes, it is. Bar number 2 is colored green. So it's okay to take that and 15 points to the upside. Now, did we know that this stock was going to gap up like this? Absolutely not. But the market told us, because the PET D is not an indicator. It doesn't tell you how high something's going to go or how low something's going to go. It doesn't tell you if something is overbought or oversold. It's simply a translator. It's translating on a tick-by-tick basis what the market wants to do. If the market wants to go higher, it translates that by coloring the bar green. If the market wants to go lower, it translates that by coloring the bar red. All you have to do is simply apply some type of structure, and then you can get in sync with that and formulate trade signals. Here's an example in GWW. Okay, we had a bearish engulfing pattern. Bar number 2 is red, so it's valid, and you went down 12 points from there. Remember, we're not telling you where to get out. You had a potential to make 12 points. You could have exited with a point gain or could have exited with 6 points, 10 points. It's up to you. Remember, you're in charge of your trading. We're not going to tell you to get out at 12 points. We give you standard formats, but we give you multiple different formats for entries and exits. It's up to you to decide how to make your own decisions. Remember, you're in charge of your own trading at Specialist Trading, not us. We're here to teach you, but we're not going to trade for you. All right, so you had 12 points to potentially capture, and then when the trend changed, as exemplified here by you having a lot of bars turning green, well, you see you have now a bullish engulfing pattern. So you could have stopped and reversed and gone long and 16 points to the upside. This is the beauty when you're trading engulfing patterns in sync with the PET D trend. All right, so we looked at buy setups. Let's look at some sell setups in stocks, okay? We have 2 bearish engulfing patterns. They're both validated by the second bar being colored red. Remember, if we want to go short, we need bar number 2 to be red. And even on this inexpensive stock, the stock fell 3 points, okay? If we look here at Starbucks, here's an older chart of Starbucks. Now, this goes against, once again, traditional wisdom. We have a strong move to the downside, so obviously the short-term trend is down. traditional wisdom would tell us now to look for a reversal pattern, to look for a bullish engulfing pattern. Remember, there is no consistency in trading that way. Every once in a while, you'll find a great top or a bottom. Don't get me wrong, you will find some nice setups every once in a while. But remember, we're trying to be consistent. We're trying to teach all of our members around the world how to be consistent, because one trade will not sustain you. You have to have a number of trades that are consistent that will sustain you so that you can be trading 10, 20, 30 years down the road. We don't just want to have, teach you techniques that will give you a good week and then you'll gain it and then lose it all back, the next month. So we're looking for consistency. So there's no consistency in trying to pick a bottom reversal pattern. If the trend is down and you see a bearish engulfing pattern, you should take that signal, because the trend is telling you most likely we're going lower, and there were 7 more points to the downside. See, the pet D was translating that the market still wanted to go lower. And if you missed that setup, well, there was another one 2 or 3 bars later, and then another one, and then another one, and one more, and it continues. That's the beauty of this if you trade in sync with the trend. Now here's what we're talking about, consistency again, all right? MDT, now we have 2 bullish engulfing patterns that are validated by the pet D, all right? But nothing really happened, okay? The market didn't really go higher. So these would have turned out to be losses, because what happened later? We have a bearish engulfing pattern, and the market changed its mind. The market's free to do that. The market decided, I want to go lower. Okay, well then we just have to be in sync with the market. We take our loss, about 1.5 to 2 points, and if we wanted to switch and reverse, we simply now change, get out of our loss, and go short, and now it's 4 points. So maybe you lost a couple of points to make 4 points. That's what consistency means. All right, 2 steps forward, 1 step back. If we look at SCG, remember we looked at this earlier in the day. This is where most people would look at this and say, well, Steve, you got to buy this, right? I mean, the chat room I go to, they love this stock. It's a nice double bottom. All the institutions are buying here. This is all the volume coincides with this. So this is a perfect buy setup, okay? All right, not really. Because look what happened, all right? We only want to trade in sync with our secret ingredient, which is the pet D. Once we added the pet D, we knew well in advance, before we even started the downtrend, that we were going lower, because the pet D colored the bars red. So it was translating that the market wanted to go lower in advance. And it was translating not to buy these, because there's no consistency in buying a bullish engulfing pattern if it's out of sync with the trend. And so rather than taking those setups, it would have been much better to go short here, much higher level, to go short here and here. Okay, DVA. We're kind of going sideways, but we have a bearish engulfing pattern that's validated by the second bar being red. A quick drop 2 days later, down 9 points. Okay, did we know it was going to drop like this? Absolutely not. The pet D told us. And we look at CMG. All right, we have kind of a sideways action, but the majority of the bars are red. But now that we have a bearish engulfing pattern, it makes no difference if we've been going sideways to lower. All we care about is that bar number 2 is red. And look what happened. You had, I'm not saying, trust me, I'm not saying that you would have made 180 points on this. You may have gotten out with a point profit. Well, maybe you wanted to take a 10 or 20 point gain. It's up to you. Remember, you are in charge of your trading, not us. We're just teaching you these high probability points for trading. And if you miss those points, look at all the signals the market was giving you. Not me. Not some convoluted indicator, or not some guy in a chat room, not some support and resistance technique, or not what the institutions are doing. The market's telling you everything you need to know. Now we can apply this to other markets. So far we've just focused on stocks. Let's look at the diamonds. That's the ETF for the Dow Jones Industrial Average, okay? Looks like we're just kind of going sideways here. There's no real trend, but we have a bearish engulfing pattern and a bullish engulfing pattern. So now, which one should we have taken? Using our high probability and our consistency with the pet D, we see that we would not have taken this one, because in order to go short, we need bar number 2 to be colored red. So we would not have taken that signal, but we would have taken this one, because a bullish engulfing pattern needs bar number 2 to be colored green. And look what happened. So if you've been using this as a directional tool, even if you didn't trade the diamonds, it would have told you that that's an up signal in the market, and the market went up 250 points in just 3 days. Now we can look at the Bitcoin, all right? This is an older chart of the Bitcoin here. We know we have a lot of people interested in this. Nothing changes just because we're looking at a different market. We can still apply the PET-D. We still see how it translates what that particular market wants to do. We have two bullish patterns here that are validated. The market went up. We have another bearish engulfing pattern that was validated. The market went down. And then we were met with another bullish engulfing pattern. You see, nothing changes just because we change markets. In fact, we can change to the E-mini S&P. All right, for all you intraday traders of the futures, here's an hourly chart. We have a bearish engulfing pattern, which traditional wisdom would tell us to take, but it's colored green, so we're not going to take it. But we have a bullish engulfing pattern, which is outlined green, so we are going to take it. On an hourly basis, look what happened, 8 points or $400 per contract. If you had 10 contracts, that's $4,000 in a day. And we can go to a smaller time frame. Here's a 5-minute chart, okay? The majority of the bars are red. Then we start to change to green. But at this point, we have a bearish engulfing pattern. Bar number 2 is colored red. That's all we need to know. 14 points in the next hour. That's $700 per contract, okay? On a 5-minute time frame. Now, we have currency pair traders. So let's look at the Forex markets, all right? Here's an older chart of the British pound. As we're going lower, we're met with a number of validated bearish engulfing patterns. You have 150 pips to work with. You could have taken a 10 pip gain or you could have taken a 150 pip gain. It's up to you. But once the trend changed, now you start looking to be in sync to the upside. And here we have a bullish engulfing pattern and 550 pips to the upside. Lastly, we have a bullish engulfing pattern in the Canadian dollar. Nothing really happened to this. It went up a little bit, but most likely would have resulted in a loss. That's okay. We're met with a bearish engulfing pattern in the Canadian dollar. So we just simply reverse. We take our loss here and 550 pips to the downside. And if you missed that one, there was another one later on down the road. And still another one. Okay, so let's recap before we go to question and answers, all right? Remember, the secret ingredient to trading candlesticks the correct way is to only buy or sell candlestick patterns, most especially engulfing patterns, that are in sync with the PET-D. The PET-D is the secret ingredient because it's the best tool I've known of in my 40 years of trading that adequately describes and translates what the market wants to do on a tick-by-tick basis. Remember, the PET-D is not an indicator. Like, it doesn't say when something's overbought. It doesn't tell you when the market is oversold. It does not tell you how long the trend's going to last or how high it will go, how low it will go. It simply translates what the market wants to do on a tick-by-tick basis. If you have that in your trading plan, that will increase your odds for consistency tremendously. So this is the secret ingredient that can really highlight your trading. Now, important points to remember here, because I know a lot of you maybe just, your eyes may be lighting up thinking, oh my goodness, how do I need this tremendously. Remember, this was not a complete strategy. I did not share with you a full-fledged strategy where I explained all of the entry signals, all right? We didn't even talk about exactly where you're going to enter. Would you enter on the next day? Would you enter placing a limit below if you were buying or a limit above if you were selling, all right? Would you, wait for a specific other technique to enter? We didn't talk about any of that. We also did not talk about stop placement. Where would you have protected yourself? Remember, I showed you a couple of losing trades here. All right, where would you have gotten out? Would you simply wait to reverse? Well, what if nothing ever changed the reversal? Where would you get out? All right, we didn't talk about that. We also didn't talk about exiting. Remember, we showed you examples where you could have taken a 180-point profit. But that would have been up to you because we didn't share with any exit points. Maybe you would have exited, maybe taking 5 points. And then lastly, we had no discussion about money management. How many shares are you going to trade? How many contracts? All right, extremely, extremely important. These are all important pieces of the puzzle. All we shared with you today was just a fertile ground, a place in which to enter or to look for some type of setup. But we didn't go into detail. We didn't make any structured plan about how to actually trade this. Well, here's what we're offering you today. We're offering you a great plan. In fact, this is what we call our Candlestick Combo. We're giving you strategy number 5 along with the PET-D tool. You're going to have instant course access, detailed instruction, roughly about 20 videos. We'll give you all the different variables for entries, all the different variables for exits, all the different variables for stops. It also comes with signal alerts. You're also going to get the PET D, and that comes with 4 separate and different trading techniques, all right? Different from what I just shared with you today. This includes both the add-on, so we'll color your bars blue and, or I should say green and red, as well as giving you up and down signals for the strategy number 5. And lastly, it comes with mentoring correspondence. Someone who's been using these techniques for the last 40 years, myself, yours truly, I will be there with you every step of the way. So anytime you have a question, anytime something doesn't make sense, you can email me and I'll try and get back to you as soon as possible, okay? So this is our attendee special today. In fact, with this particular candlestick combo, you'll be able to see signals like this. This happened about 3 weeks ago in the first weekend of October. As you can see, shop was kind of going sideways. If you had not taken this course yet, you would have said, well, Steve, there's nothing to do here. I really see no action taking place. But what do we have? We have a bearish engulfing pattern. Now, if you have not taken this course, you would have said, well, I can't really take this signal because I've always been taught that a bearish engulfing pattern is at the top of the trend. It's a reversal pattern. And we've only gone sideways here for the last 2 weeks, so how would I take this? Well, you'd apply the PET D, and you see that bar number 2 was colored red. That's all you need to know. Look what happened the next day. The stock dropped 11 points. Now, is there any way I would have known in advance that the stock was going to drop 11 points? Absolutely not. But how did our members know the signal was taking place? How did we see this? Because the market told us, all right? It gave us the structure in a bearish engulfing pattern, which has a negative bias, but it was confirmed with the PET D, the secret ingredient we're missing. And that's how you can take signals like this, okay? Now, we're not guaranteeing you that everyone's going to drop 11 points in one day and you're going to be making tons of money in the first week, but this is the type of consistency we're looking for. So trust me when I say a year from today, you will have wished you became a member of this course. Okay, so we're offering you our PET D combo. That's strategy number 5, okay, our combo, our strategy for candlesticks, along with the PET D trend directional tool, all right? Our attendee special today is $14.95 plus $97 per month. This is for a limited time only. Now, I know a lot of you may say, well, Steve, gosh, I can't come up with that. Well, we do have payment plans, so you can come up with a different payment plan by contacting ProTrader Strategies. But if you do have the capital and some in order to buy this, and you said, Steve, I'm not interested in a monthly payment, well, then it's only $29.95, one lump sum fee. This is usually close to $5,000 for both of them, all right? So for $29.95, you can have both lifetime access to this course, along with me as your personal mentor. Now, here's how to take advantage of this. You contact my sister site, ProTrader Strategies. They handle all my marketing, promoting of my courses, and you can set up some type of payment plan with them by either emailing them, or probably the best thing to do would be to contact them by calling them at 310-598-6677. They have trading consultants manning the phones right now. Now, if you're ready to get on board and you just want to pay the one lump sum, you can go to that link at the very bottom. And that's not a live link, but if you look in the chat box, there is a live link that is posted in the chat box, and that will take you there and to the sign-up page for $29.95. And it will give you more information there as well. So I would suggest, just off personal experience, I know a lot of people have limited funds. The best thing to do is just to contact ProTrader Strategies. Call them directly, speak to one of their trading consultants. There's no obligation. You don't have to sign up for calling them. You can get more information, and perhaps you can construct a payment plan that will suit your needs, okay? ProTrader Strategies handles all of that. I handle all of the teaching and all of the mentoring, all right? I'm going to leave all this information up here so that you can get your trading back on track, and I'll open up the question and answer box, and I want to thank you all for holding off on any questions, okay? Let me see here. Question from Alan says, so do you wait for the close of the second day before entering? That's a good question, Alan. Yes, because remember, we want to make sure that this is a valid engulfing pattern. See, the first thing we're looking for is the structure of the candlestick pattern. Okay, so let's say it's half an hour before the close, and it looks like a perfect bullish engulfing pattern is going to happen. Okay, now once again, we're not here to tell you how to trade, but off my personal experience, we know that anything can happen in the last half hour, anything can happen in the last 5 minutes. Many times, just minutes before the close, things will happen and the pattern is no longer valid. So let's say bar number 2 didn't engulf bar number 1. So in all actuality, there is no signal there. So what we do is we'll wait for that to close. Now, if you have success with not waiting, let's say you want to get in 5 minutes before, okay, that's up to you, just as long as you're responsible. Remember, we're not here to tell you you have to trade a certain way. We're giving you different options and different variables that have high levels of consistency. And one of those is to wait for the bar to close. But if you feel comfortable enough entering 5 minutes before, thinking that it's going to be a valid engulfing pattern, then go ahead. Now, while that bar is in play, let's say it's 5 minutes before the close of that bar, you will see the color. The PET D is always, on a tick-by-tick basis, giving you the color of that particular bar. So you don't have to wait for the close of that bar for a color to appear. So even if you're looking at an hourly bar, in the first minute, the PET D will color that bar. It'll continue coloring it, on its tick-by-tick basis. Now, most of the time, it's not that fine-tuned where that each tick is changing color from red to green. Sometimes it is in these choppy markets, but most of the time, if it's green for the majority of the time and you have 5 minutes left to go to the close of the bar, it will stay green. All right, just want to let you know that. But in regards to your question, we're more concerned about an engulfing pattern being generated as opposed to the PET D. Okay? I hope that answers your question. Let's see, so what is the PET D measuring that it's a short-term indicator? Well, all I can tell you that, Alan, because it's a proprietary tool, we're keeping it in-house because we have a number of institutions that are actually interested in purchasing it, which we will never sell, but we may actually license it, so we want to keep the formula in-house. I can just tell you it's based off of momentum, and it takes on a tick-by-tick basis of what the market you're looking at, and it comes up with the calculation, and according to its requirements, it's either going to generate a green bar or a red bar. And that's all you need to know. Now, I've often said this because we have so many students, and sometimes I'll go online and I have to laugh because I'll see these message boards, and everyone in the world says they have it figured out what the PET D is based off of. And they go, oh, it's just based off of moving average. Oh, it's based off of highs and lows. So far, I haven't read one review where anyone is correct. But you know what? It wouldn't even matter. It wouldn't matter if I gave away all the formula rules to the PET D, because if you don't know how to apply it properly, you'll lose money. I can tell you exactly what it's based off and how to calculate this formula, and you most likely still lose money because the secret is not in knowing the answer. The secret is in knowing how to apply it correctly. But guess what? With all of our courses, with all of our colleges, you get 40 years experience of someone who has used it for nearly 40 years and shows you the correct way. That's the secret to the PET D. Not in its formula, but in how to apply it correctly to your trading, okay? Yes, everyone says it's based off of a moving average or based off something, and so far nothing has been correct. But once again, even if someone knew the correct answer, it wouldn't make any difference. We have people that I instruct them, even that are members of the course, that know that how to use the PET D, but when they apply it incorrectly, they still lose money. And I say, well, that's the whole beauty of the PET D. It's not in what it's based off of; it's in how you apply it. So that's what we try to teach you. We try the beauty and the validity and the true diamond in the rough of this course is in someone who's been using this for 4 decades and knows how to use it correctly. All right. The guarantee that you talk to Pro Trader Strategies about guarantees, but I know that we're giving you all this information. You're learning all the rules, so we can't take that back. We can't. A number of people have in the past, when we first started this some 10 years ago, would get all the complete rules and all the 17, 20 videos, and then they'd say, well, no, thank you, and I want my money back or something. And meanwhile, they've just stolen all the rules. So I believe Pro Trader Strategies their guarantee is that they'll substitute, if you're not happy with any of our strategies, they'll substitute for something else. But I would talk to them first. Remember, we're an educational company. We're not just saying we have the perfect system, and if you don't like it, we'll give you your money back. We're actually educating you. We're taking the time in the course to answer emails, to tell you exactly how to do it, to work with you, to see what works best for you. And that's what you're paying for. We're not selling you some master system that hasn't lost money in 10 years. Trust me, I've taught and I've traded systems, and every one has blown up. Okay, everyone, even if they had 10 or 20 years perfect results, perfect statistics, they've all gone into the can sooner or later when the market changed. That's why you're required to show a disclaimer, because nothing is guaranteed. So what we are offering you is sound fundamental education. You can't take that back. You can't unlearn that and give the education back to us. So that's what you're really paying for in our courses, okay? Now remember, we're at the end, as I have been stating the last couple of weeks, we are at the end of the year. We have basically 2 more months left, all right? Look at your trading. Are you anywhere near where you thought you would be at the beginning of the year? Okay, think of that. Think of where you started on January 1st or January 2nd, the first trading day, 2017. All the hopes and dreams you had for this year, are you anywhere near where you thought you'd be? You know, maybe a lot of you thought you'd be able to buy that car you were waiting for or have that dream vacation to go on if you made some extra income trading. Are you anywhere near that? Were you able to do that? I can honestly say that most of you aren't. In fact, most of you are probably worse off than when you first started. That's okay. I know what that's like. I was there too when I first started 40 years ago. I was lucky enough to have a couple of mentors that were able to change my way of thinking and which ultimately changed my way of trading. And that's what has sustained me for 4 decades now. So my goal as your mentor is to do the same to you so that you can have these golden nuggets of information, of education that has stood the test of time, so that we'll not just sell you some $10,000 system that works maybe 1 month and then just doesn't work at all. We're giving you sound fundamental education so that you can be trading 10, 20, 30, 40 years down the road. That's what we're trying to instill in all our members. Okay? So if your trading has suffered, if you want to really close out 2017 in the right direction, come on board. I'll be there with you every step of the way. And hopefully you can change your trading around so you can be trading for years down the road, okay? This is a great way to start with our Candlestick Combo. Contact Pro Trader Strategies. They can set up a payment plan for you, or you can buy it at that locked-in price at $29.95. You know, once again, the standard price for both of these is roughly around $5,000. At $29.95, you're locked in for life, okay? In conclusion, I want to say thank you so much. I hope you got something out of this. I hope you learned a little bit on what I feel is the correct way and the secret ingredient that's missing in trading candlesticks, most especially engulfing patterns, the correct way. I want to thank you so much for attending. I wish you all the best of luck, and I look forward to all of you becoming students of mine and members of the Candlestick Combo course. Thank you so much. I'll see you next time. Bye-bye.